So the vision is what really gets me attracted to begin with, right? Because as we all know, ideas are plentiful these days. It's great to have a great idea, but it all comes down to how you run it and execute it. And I think I heard you say that somewhere as well. So when I'm looking at a founder that I want to invest myself in, the vision is what gets me attracted first, but then I quickly shift to the track record of the founder, the problem that they're trying to solve, what their overall target market is, an obtainable market is, and then most importantly, it comes down to the executional capability of not just the founder, but the team.
You just mentioned something that sparked my mind. I would like to know more about competitors. So, when you assess a company, you are also going to talk with the competitors as well?
I do. I have access to a lot of entrepreneurs and founders, and I keep track of who's doing what and what's their industry specialty. So when I'm looking at an investment opportunity, most of the time I have at least 6 or 7 founders in that same space that I can pick up the phone or meet over coffee.
My God, what's the first startup you invest in?
The first startup that I invested in was it was called Zero Waste Technologies that I mentioned earlier. That did not go well. But what drew me in was because I believe in recycling so much. So when I met with this founder whose vision was to revamp the recycling industry for every person, I immediately was drawn in. And that was my heart and my gut telling me that listen to this guy. When they're pitching to a VC, that they should be knowledgeable about the VC's investment thesis, what kinds of companies have they invested in, and be aware of their philosophy. You can't just say, I'm here so you can write me a check because I have a great idea. No, it's always good. And so what you said just takes that to the next level. You're not only telling the VC that I know your investment philosophy and these are the 12 companies that you've invested in and that's why you should invest in me. But no, there's complementary technologies and service offerings. So what I could be a customer to these 3 of your portfolio companies and vice versa. I think gut feel is still very important, but you don't want to just look at the gut feel. So the way I approach an opportunity is I always start with what my heart and my gut is telling me. So that is for me the green light to dig deeper and to go and look further into it. And then I bring in the data or have conversations with fellow investors who have invested in similar companies, talk to other founders in that sector to see if this truly is a pain point that needs a medicine.
Today, we're gonna interview Ajay Dugar, an angel investor who made bold bets across climate tech, AR, VR, EdTech, and most recently, SpaceTech, supporting groundbreaking innovation at the pre-seed and seed stage across the United States, Europe, and Asia. With a check size between $250K and $1 million, his portfolio spans high-impact sectors like artificial intelligence, energy, AgriTech, and beyond. We are excited to learn from his experience as an early believer in what's next. Hey Jay, and welcome to the VC Room. It's a real pleasure to have you with us today. How are you?
I'm doing well. Thank you, Andrea. I'm happy and glad to be here as well. Looking forward to a nice conversation.
We are pleased to host you, AJ. Let's start with your origin story. I would like to know more about you and what led you into the world of angel investing.
Yes, of course. I graduated with a degree in computer science and business management from Luther College in Iowa, and then I went straight away into management consulting. So that was my early career. I spent about 8 years at a big 6, and then went and got my MBA. And post MBA, I started to think about what I really wanted to do in terms of industry selection. And so I moved into media and entertainment because that's what I was interested in back then. And I spent about 12, 14 years in media and entertainment. That's what brought me to Los Angeles. And I was leading teams in product development, product management, and then more recently, I've been focused on partnerships, business-to-business partnerships, and business development and company growth. And then about 4 or 5 years ago, I decided to become an independent consultant. So I was focused on helping founders, startups, founding teams on various aspects of growth through partnerships building, through by introducing them to my network of investors and other ecosystem partners. And during one such consulting assignment, the company that I was working with as an advisor asked me, told me that they were raising a friends and family round. And because I believed so much in what the founder's vision was and the problem that they were trying to solve, I said, hey, I'll come in as an early investor. I put in a small amount with the friends and family round and continued to advise him on business growth. And that's when I realized that, when you invested into a vision, the kind of decisions that you make shift a little bit because now you have skin in the game. Earlier, I was just a paid advisor. And that got me really interested, and I continued to foster that. And then as, my next client that hired me to advise them also turned out to be that they were raising a fund, so I put in a little bit of money in there as well. And so that's how I got started in my journey as an investor from a consultant only.
Amazing journey, and I'm not sure if you realize that we have similar career paths, as I'm also a person who is a very good tech engineer by profession, studying computer science and afterward moving into the business. So we are pretty similar. I would love to understand, because you mentioned that you believe in the vision of the entrepreneurs that you invest in. What is more important for you? Is it really the vision that they have, the bold vision that they have, or it's actually more important the track record that can show you before you invest into them?
So the vision is what really gets me attracted to begin with, right? Because as we all know, ideas are plentiful these days. It's great to have a great idea, but it all comes down to how you run it and execute it. And I think I heard you say that somewhere as well. So when I'm looking at a founder that I want to invest myself in, either through my time or a capital investment, the vision is what gets me attracted first, but then I quickly shift to the track record of the founder, the problem that they're trying to solve, what their overall target market is, and obtainable market is. And then most importantly, it comes down to the executional capability of not just the founder, but the team. And so I quickly jumped down into trying to meet individual members of the team and see not necessarily if they have a track record in starting or working for other startups, but just to see their problem solving capability and how badly do they want to solve that problem. And so these are the three factors that I look at: the vision, the ability to execute, and of course the capability of the team.
Awesome, AJ. I would like to know, startups are usually risky in terms of investment. And out of all the asset classes and industries, why did you choose actually to focus on early stage startups instead investing in more traditional assets?
Yeah, that's a great question. The way I look at investment is I came in through venture capital. I had interned with a VC fund once, and a lot of my friends are in venture capital. So when I was looking at what is my thesis, I was focused on the diversification aspect of it. So from a VC standpoint, right, one of the reasons we invest in venture capital funds is that we have that diversity of expansion of different industries, and you're not putting all your eggs in one or two baskets like you do when you're an angel investor, perhaps. So that's what got me interested, and the focus on startup investment came from, of course, from an ROI perspective. The bigger the risk, the higher the return, possibility of a return. So that's what initially got me interested in it. But then I realized that a lot of the innovation, the true cutting edge innovation, was coming from the startup world. And especially during COVID in the 2020 through 2022, I was amazed at the number of out of the box ideas that were coming out and being funded. And that really gave me a lot of hope and trust in this new generation of entrepreneurs who are not just looking to jump on whatever was trending at the time, but became a lot more focused on problem solving that had never been attempted before. And that's what got me interested in decentralized ledger technology and AR and VR. So anyway, I hope I answered your question from
I
that perspective.
completely agree, and yes, you answered to me. I would like to know what you like the most, actually, um, to invest in startups where you, as an angel investor, you have the chance to get involved more and more into the business and supporting them in order to scale by opening some doors for them as well and being their mentor. Or would you prefer more to invest into a venture capital fund where general partners with good background experience and expertise are willing to invest the money for you in bold startups and technologies ideas? What do you prefer?
Yeah, so right now, because most of my investment experience over the last 6 years or so has been in the startup world through angel investing, that's a space that I know and understand well. But I've worked with and know enough venture capital founders or funds and know how they work. And so if I do see myself moving slowly towards the VC side in the next 3 to 5 years when I'm able to come in either as an LP to a fund or work with the GP LP partnership to bring in the companies that I'm helping incubate. So, for example, the two companies in my portfolio right now have raised anywhere between $500,000 to $1 million. So they're small scale startups. But both of them are going to be ready to raise their Series A within the next 6 months. And each one is looking at between 3.5 and 5 million. So at that point in time, I'm looking to take them to my VC fund friends and help them come into this company. And they already know me, and so they know how the company has grown and what the valuation would be for that price round. But yeah, that's my goal. And then eventually, once those two deals go through towards the end of this year or early next year, I will then look into working with the GP myself to get in as a limited partner.
We will be welcoming you in this world. And congratulations for the smart investment that you have done. If you mentioned that they raised small amount up to 1 million and they are about soon to raise Series A, so they are growing and scaling. I would like to know for the founders which are reaching you out through the cold email or a warm introduction, what's the first thing actually that you are really looking to in order to select these kind of startups that you mentioned you have in your portfolio?
So, while it's important, as I mentioned earlier, the vision, the team, the execution abilities, all of those are important. But when I am making next stage decisions of whether to take them to the Series A and who to introduce them to, my primary focus becomes product. And then I start to look at the product market fit. Are they, sometimes visionary, and I found this out the hard way. I had made the assumption that all founders are very crystal clear about who they're selling to and what problem they're solving. But I found out in more than one occasion that that's not necessarily the case always. So one of the first things I then look at to answer your question is, do they have a clear idea of the market that they're selling to and the problem that they're solving, the pain point that they're solving? And oftentimes the initial answer I get from them is that, yes, of course I know who I'm selling to, and of course I know the problem I'm solving. But then when I say, okay, let's scratch the surface and go 1 or 2 layers deep, oftentimes we come to the same conclusion that, wait a second, maybe we need to expand our market or change the market. The serviceable, obtainable market is really too small here, but if we move from manufacturing to, let's say, an agricultural or renewable energy based industry, we might actually have a bigger market to sell to over there. So that comes out. So to me, finding that fit where your product is solving a problem and you know the exact size of the market that you're going after is key. So that's one of the first things that I look at.
I love your vision and your perspective. In my case, it's very important what you mentioned, but in my case, I'm looking to something else at the beginning. I'm looking how willing are actually the startups to really generate revenue, because currently on the market there are a lot of startups which are just attracting money, but they are not actually able to make the revenue. But somehow this resides also in the market size, because as big as is the market, as big as is the potential also to sell.
Yes, exactly right. And what you said is right on point, because when I'm looking at their product and the product development pipeline, it's really answering my question as to how serious is the founder or the founding team to scale it up, right? And to become successful in the marketplace, rather than just keep raising seed round for Series A, Series B, and sort of do it more for bragging rights that I've raised these rounds from well-known VCs, rather than focus on the product and the scalability. And I've unfortunately had one experience where the founder that I invested in completely misappropriated the funds. They raised a Series A of 3.2 million from a local VC here, but within 6 months, most of it was gone, and it wasn't spent in the right way. So there was some misappropriation of funds and all of that, and the founder was more interested in telling the world that he had raised all this cash from a well-known VC, rather than focusing on the product development itself. So since then, I've become more product focused.
It's happening pretty often, this, unfortunately. But what I have seen on the market, discussing with other angel investor, venture capitals, funds as well, most of the investors are focusing on assessing very well, actually, the startups, in order to check out if they are able to actually generate revenue and profit as soon as is possible. So I believe this problem will change soon, hopefully.
Hopefully.
I'm curious, because the most well-known and heard question I receive from the startups I'm mentoring and advising, it's, Andrea, where I find investors. And I would like to understand, how did you find actually the startups you invest in? It was actually a warm introduction by somebody from your network, or it was actually a cold outreach from their side? I know you are eager to get back to the conversation, but let me quickly share something that might be highly relevant for you. If you are a venture capitalist looking to connect with high quality deal flow or build relationships with limited partners, we have built a platform just for you, vcroom.com. There, you will be able to engage directly with vetted startups and limited partners who match your investment thesis. And if you are a startup founder looking to raise capital and connect with top-tier investors, head over to vcroom.com and find the right VC for your journey. The platform goes live by the end of May, so this is your chance to join the waitlist and be among the first to get access. We can't wait to hear your feedback. See you inside the VC room. How does it work for you?
So fortunately, I'm a member of two networking groups that bring together investors and founders and entrepreneurs together, right here in Los Angeles. So I go to those events, and I'm also I had the pleasure of being a mentor at a local accelerator, where I was mentoring the startups that were focused on SpaceTech industry. And so when I go to these events, and especially the demo days, when at the end of a cohort at an incubator or an accelerator, they have these demo days where all the founders come together and do a 5 to 10 minute presentation in front of investors. That has been a great way for me to find out which companies I want to at least have a next level conversation with. And so the companies that I've invested in so far as an angel have all come through accelerators or incubators through demo days. But one or two of them have also come through this network, this social gathering that I go to, where we meet once or twice every month in person. which brings together investors and founders. And we have just casual conversation. There's no formal presentation. It's just casual conversation. And then when something strikes my eye, I reach back out to them and have a more in-depth conversation.
Awesome. So you prefer actually a face-to-face interaction with potential deals instead of online, let's say.
Yeah, if they are local to my city, then I prefer that, and I'll drive up to them if that's convenient. But if they're out of town, then of course we have a video chat just like this one.
Okay.
Yeah.
So I see actually that you have backed multiple founders. Can you please tell me what patterns or which qualities do you consistently see in most successful ones?
Yes. So the most successful founders that I've worked with so far, either as an investor or as an advisor or consultant, I think the ability to acknowledge that they may be on the wrong path and be willing to shift. We may call it a pivot, but oftentimes it's not just a pivot because they're still continuing on the same path. They're serving the same customer base and the product line is solving the same problem. But they realize that maybe their growth strategy or the scale strategy isn't working. So I've worked with founders who are so steadfast because it's their vision, it's my baby, so whatever I say goes and I'm the right guy. They don't usually go that far. So for me, the ability for a founder or founding or co-founders to quickly admit that they may be on the wrong path and work toward fixing it by either bringing in an advisor or willing to listen to see that, okay, maybe we're going down the wrong path. We need to start looking at adding these features to the product set but just by adding a new feature set, we might be able to go after the fintech industry rather than the AgTech industry that we're focused on right now. So that to me, to pick one thing is that ability to realize that they're on the wrong path and be coachable.
Being coachable, this is what I would like to say as well. I'm always saying the fastest way to scale is to be coachable.
Yes, exactly right.
I believe your vision is pretty similar with mine, and I would like to know how do you know when a founder truly understands how to deploy the capital to grow their startup wisely. I mean, to not spend actually your money with things that are not literally are not useful and will not lead to a success.
Yes, great question. One of the slides that I pay particular attention to, especially if I'm thinking about investing or bringing in an investor from my network, is the use of funds slide. And I will look at the use of funds slide, and usually people aren't too creative with that, right? They'll just look at another founder, what they might have done, and allocate percentage of the funds to marketing or product development or distribution or what have you. I then double click on that and ask them over a conversation or ask them to actually write it out for me rather than just a pie chart. Write it out for me in the business, show me the business plan where they want to spend the money and why. And oftentimes, I would say about 50% of the time they're spot on. What they've thought about this use of funds is accurate. But almost half the time, they have miscalculated the amount of money that would be required in completing the product. So if going from going to a prototype to a beta or to a general availability release, they have underestimated how much it would cost or have overestimated the marketing spend. Or have overestimated or underestimated how much they would need to pay the team for the talent to stay there. So I will just have an open conversation with them, bring in some of my experience, but I'm not always right because they know their industry better. So it's more of a dialogue where they listen to what I'm saying, I listen to what they're saying, and we come up with a proper allocation of those funds. And more often than not, we come up with what we think is the right allocation.
I love the idea to have a dialogue with them, and I see this very useful also for us in order to understand better their vision. And I always say that you understand very well if a startup it's ready to scale, looking into their pitch deck, checking their use of funds, their track record, and I'm curious to know if you have written a check for someone without much traction or track record? And if yes, what gave you conviction to do this?
So that example that I gave you, where the founder sort of was able to raise, after my investment, was able to raise a VC round, and then it all went belly up because they misappropriated the funds. I I was so impressed with his vision and the problem that he was trying to solve. It was called Zero Waste Technologies, and it was basically in the renewable energy space and recycling space. So he had a vision for a device which would be available, which would be placed in a commercial setting, let's say in airports or train stations or city streets, which would be a recycling machine where whatever you drop into it, there's a sensing and sorting mechanism where they identify what material type it is: aluminum, glass, cardboard, wood, what have you, paper. And then it would put it up in an appropriate receptacle, and then when the receptacle was filled up, there would be a crushing, grinding mechanism that would come down, crush it, turn it into vacuum sealed cubes, and they could be transported back into factories and other places where they could be reused and repurposed. So that was the whole concept. It was a circular economy. And because I knew a little bit about the waste management industry, I was immediately impressed. So, but there was no track record. This investor, this founder, had only been a consultant before. The prototype wasn't even ready. So I just went with my gut feel for what the problem that he was trying to solve. And I realized that might have been a mistake, because for the first 6 months we had the hardest time to even get the prototype to work, let alone come up with a beta version. And then he had already promised 2 or 3 clients, big customers, big airports, that the product would be ready at a certain time, and it wasn't. And so we got into a lot of issues there. But that was my lesson learned, is that don't just go after a big vision to save the world.
Well, I believe we all, I'm not sure exactly when you have done this investment, if it was at your early beginning or afterwards, but I believe most of the investors at the beginning are doing kind of this type of mistakes. I have done it myself as well. The first money I have invested, actually, I lost it due to the fact that I didn't take into account the track record of the people I will invest in. I have appreciated the most the idea because it was brilliant. As an IT engineer, I can understand technology very well, and I have really appreciated. And I realized that if I would assess the investment from this point of view by taking into account the expertise and the track record that the co-founders had, I would definitely not invest in, and definitely not lost the money. But it's a lesson to learn, and it's amazing to have this kind of discussion to see the perspective of other investors as well. Because at the beginning I felt guilty. Now I understand that it's a common pitfall, let's say. And I hope investor will take into not investor, startups will take into account that even though maybe they do not have track record, they should prove that they are a good startup to invest in by being very ready with the market size and all those details, the use of money and other details which are really important to put it in the pitch deck. However, will be high risk by nature, but I would like to know, how do you personally think about risk and uncertainty when you start to assess and invest in a company?
Yes. And by the way, before I answer that, I just want to make a point to what you just said, which is, in today's world, there's so much information available. And this podcast, such as the one that we're in, is an example of that. So founders, entrepreneurs, really have no reason to repeat the mistakes that were made by founders 5 or 10 years ago, right? I mean, yes, there's always the human element of it, and people are going to make mistakes. There's nothing wrong with that. But to when they listen to the common mistakes that founders have made and then sort of try to overcome it ahead of time, right? Not going completely with your gut feel just because the vision and these problems sounds easy to solve. So anyway, I just wanted to make that point. And to answer your other question, which I think I understood to be as what else do I look at as
No, no,
for an
in
invest
terms of your personal risk, how willing
personal
are
risk?
you, yeah,
Yeah.
to risk and invest in risky startups currently?
So my the risk capacity has leveled out. So when I first started to invest, I was willing to take a lot more risks, and I think it had to do with age and not having made mistakes. Right, that always comes into play. So I was very quick to make a decision and write a check. This was as early as 2020 or 2019, 2020. Then I realized that once you have one or two losses, like looks like you have had that too, we quickly realized, you go back and take stock of what led to that decision uh, of investing in a company like that or a founder like that, and so you don't want to repeat the same mistakes. So you make a point, but my capacity to take risk now has changed. I wouldn't say I've become risk averse, because in this business as an investor, either angel or VC, you cannot be risk averse. It's all about managing risk, right? If you wanted to be risk averse, there are other investments or asset categories to go after. So I have become better, I'd like to think, at analyzing an opportunity that comes my way. So the examples that I gave you earlier was just looking at the founders, their ability to execute, what have they done before, and then the product. How dedicated are they to complete the product, scale it up, and then move into new territories? That to me is crucial. And I will take a risk if I see that the founder or the founding team has that burning desire to not just solve a problem but be successful. And even if it means they're being selfish, they want to be rich, they want to be a billionaire or a unicorn, that's fine, as long as the underlying reason for why they want to do that is to get their product out to the marketplace and solve a problem and fill a gap that doesn't exist right now.
Awesome, awesome. I love these ideas, and I completely understand that somehow maybe at the beginning when we start to do this kind of investment we assume more risk, but by the time as a person who always think logically and analytically, we do not want to risk
Yes,
anymore by the time, otherwise we will lose everything and we don't want this.
absolutely. Absolutely.
I'm always suggest in social media and advise startups I have mentored so far to not look just for money, to look for smart money. And from my point of view, it's really important to have by your side an investor who really can open some doors for you and support you in your journey. I would like to know, what does founder support mean to you in practice, and how hands-on are you with your portfolio?
Yes, that's a that's a great point, because, as you said, smart money is crucial. And there was a time a few years ago where founders that I interacted with, that I was working as a consultant, I would talk to the CEO, and he or she would say that right now I just need the 500K or the 750K, and I'll take it from anybody, even the mafia. They would joke about that. But what they've quickly realized that along with money, you need guidance and support and strategic relationships. And so, because I became an investor, not because I wanted to become an investor, but I was already advising the founder on business growth opportunities. So, and when the opportunity to write a check came in, I already knew what they were doing, what kinds of success rate they had, and what was in the pipeline. How was their product and engineering team? So I'm a big believer that strategic partnerships. And so when I recommend my clients to a venture capital fund, if they're looking for a VC round fund of 5 or 10 million or more, I will always make sure that I'm introducing them to the VC that has the track record of being able to open doors for them, not just for customers, but also, be able to introduce them to complementary technologies, because partnership is huge. My sweet spot is partnerships. So when I talk to a founder and they tell me that, no, I don't want to partner with that company because they are a potential competitor, I immediately stop them and tell them, look, that's one of the biggest mistakes a lot of founders make, is they look at a potential partner as only a competitor. Yes, there's always a situation where a company might be a direct competitor, and yes, you don't want to partner with them. But I've seen more often than not, if you really dig deeper and realize that, yes, they might be competing with me here, but in 3/4 of my business, they can actually help me get into new territories and find new customers. So that to me is an important job that an investor can do.
I have a perspective here, and I would really like to explain you few things about it. So I wrote a book, and the people ask me, what's different with your book based on what we already have read in others? And I'm always saying the following. And I would really want to share this information with the startups are looking to us, because you throw the ball, let's say, into my garden, and I really think that this is a really smart idea that you mentioned, and I completely emphasize with it. When you look, if you go by yourself to research and talk with investors, it's very important when you look into their portfolio to check out in which kind of companies they already invest in, and if they can be complementary with your business. What that means, it's when you will approach the investor, tell them actually that you already check out their portfolio and you consider that you can make exchange of clients with the other companies. In this way, the money that they invest in, they will come back fast and will help the other companies to grow up, and will help your company as well to attract more clients pretty fast. And this is amazing, because in this environment you position yourself as a company who can deal with anybody. Look my cat. Who
There
can
it
deal
is.
with
Yeah.
anybody and can make more deals with the money that they raised. So thank you very much for mentioning this information, which is really valuable, and I'm happy to see that my vision is the same with other leaders like yourself.
Yeah, no, absolutely. You're spot on. A lot of people don't think of it that way. Like I always advise my clients that when they're pitching to a VC, that they should be knowledgeable about the VC's investment thesis, what kinds of companies have they invested in, and be aware of their philosophy. You can't just say, I'm here to so you can write me a check because I have a great idea. No, it's always good. And so what you said just takes that to the next level. You're not only telling the VC that I know your investment philosophy and these are the 12 companies that you've invested in and that's why you should invest in me. But no, there's complementary technologies and service offerings. So what I could be a customer to these 3 of your portfolio companies and vice versa. Really good.
Amazing. Thank you very much for this information. Brilliant. Tell me now, if you look in the future, ahead, I don't know, 5, 10 years, let's say, what trends or shifts do you see shaping the early stage investment landscape?
So that's a great point, and I have found myself thinking about that every now and then. Early stage investing is going through a change already, I think, in the sense that when I go to my investor network, I'm realizing, and even in my angel investor network, I'm realizing that there's more of a cohesive and collective decision making rather than individual. So, for example, I'll give you an example. I belong to an angel investor club right here, and earlier, when we got a deal flow, each of us would look at it separately and decide how much we want to put in, and we would do the deal directly with the founder. Now I'm seeing more and more what's happening is multiple angel investors will get together and say, okay, let's come in as a unit. Not because they asking the ask is higher, but we can strategically help each other because of what each of us bring to the table. And so let's come in as a unit and invest. So I see that happening more and more. I mean, there's always going to be individual investors, high net worth investors that write a check to an opportunity. But where I see it going in the next 3 to 5 years is bigger investor checks. You know, as the AI explosion continues, the investment size is going to increase, and the risk capacity for individual investors is going to decrease. And as a result, they will team up with their fellow investors to do a collective deal, a collective investment rather than a one-person investment.
And we came back to the idea that, you know, smart money are very important by gathering more brilliant people which have amazing network will help you to scale faster. You mentioned before about the gut feeling when I ask you about your investment in companies who doesn't have track record. I would like to know, how do you balance instinct and gut feeling versus data and track record when deciding to invest in a startup?
Yes. So I think gut feel is still very important, but you don't want to just look at the gut feel. So the way I approach an opportunity is I always start with what my heart and my gut is telling me. But I will then, so that is for me the green light to dig deeper and to go and look further into it. And then I bring in the data or have conversations with fellow investors who have invested in similar companies, talk to other founders in that sector to see if this truly is a pain point that needs a medicine. So I almost would say, I want to say 50-50, but it's more likely 30% gut and heart feel and 70% data and all the other validations that I do. But if I didn't have the green light through my gut feel, I wouldn't even go into the data.
Amazing. I love your answer. You know, I'm very logical, like, and looking into data, if on a paper is looking amazing, and I do understand from figures point of view that everything is fine, I should go further with the investment. And in the past, even though my gut feeling told me, Andrea, do not invest, I don't know to explain why, but do not invest. I went further because the data told me that it's a good deal. And what I found out, it was that my gut feeling, it was actually
Correct.
good. Yeah.
Yes.
So now I completely understand your perspective, and I think we have to combine both. Analyze the data and listen to our gut feeling as well.
Yeah. And sometimes, you know, I've had one experience where the gut feeling said, yes, go ahead. And the data also said, yes, go ahead. But there was something off when I spoke to the competitors of this founder. They were telling me that the issues that they were having and they were having to pivot. And so when I came back to this founder and he was so steadfast on going in the one direction only, I actually said no to it, even though my gut feeling was correct and the data was correct. Just raw data was correct. But what I found out through other conversations and tallied it back to the original founder, it didn't match up. And so I said no. So sometimes that can happen too.
You just mentioned something that sparked my mind. I would like to know more about competitors. So, when you assess a company, you are also going to talk with the competitors as well?
I do, and fortunately, I have access because I I was a mentor at this incubator, accelerator, and I also belong to those two networking organizations that I told you about that brings together investors, founders, and entrepreneurs. I have access to a lot of entrepreneurs and founders, and I keep track of who's doing what and what's their industry specialty. So when I'm looking at an investment opportunity, most of the time I have at least 6 or 7 founders in that same space that I can pick up the phone or meet over coffee.
Oh my God, this is awesome. And I love to have this kind of discussion because, even though I'm an expert in fundraising, I'm investor as well. It's something new for me and I will take into account from now on and I will apply because I never try to do this and it is actually the first time when I'm hearing that an investor are going to talk with the competitors of the companies they are looking to invest in. And I really believe that it's something brilliant because your risk is going down.
Yes, exactly, and you get a different perspective on on what makes that product or that market tick. You don't want to just go with the entrepreneur that you're trying to support, and the other thing is when a founder tells you that they don't really have a competition and they are blazing a new trail. In most cases, that might be true in 5% or less of the cases, but in 95% of the cases, that's not really true. And that tells me that the founder hasn't really done their own research in their own industry, and they think that there's no competition.
AJ, thank you so much for sharing this information, precious information. I will take into account and I will also start to do this because I really believe that will help me to mitigate the risks from now on. Now, we are in a digital era and the personal brand is very important. Uh, for your perspective, how important it's the online presence and how much influence your decision to invest in a startup?
It depends on the industry. More often than not, I think that online presence can only help if it's done in a strategic manner. So for example, when I invested in a company, co-invested in a company in 2022 that was they were using decentralized ledger technology to keep track of how companies were adhering to the United Nations 17 Strategic Development Goals, the SDGs. And so when I was looking at how this company was using the data that they were gathering, it really brought me to the point of looking at the online presence or what kind of thought leadership that this founder or this company was putting out there. And so LinkedIn is a great way for people to have an online presence where they can strengthen their brand by either commenting or putting out original, brilliant, thought-provoking ideas, which makes me believe. And if I read something interesting on LinkedIn, let's say, and I will follow that author or that entrepreneur, and if I come across that same entrepreneur at another event, or if I hear that they're trying to raise funding, then they get to the top of my list, and I'm able to refer them to other investors if I'm not the one for them. So I would say overall there's a benefit to that.
Thank you for your perspective. I didn't do in the past so much social media marketing, but I do consider that is important. And I saw actually that the startups, co-founders which are willing to expose themselves and also to highlight their track record and what they are doing and how they develop the startup from a one to another one, they became more credible.
Exactly right. It does add to the credibility.
Um, what actually surprised you the most when you talk first time with a founder? Even though I don't know, you saw in a social media about them, somebody introduced you to them. What was that information that surprised you?
What surprised me and this happened again during a recent conference. I bumped into someone. There's a particular entrepreneur that I've followed on social media for 6 months or 8 months, and I really liked their articles. I bumped into them at a conference, and I went and shook hands, and I told them that I follow their writings. What got me interested is because I had formed a certain image of this person, that they only know about this one industry, right? And in this case, this happened to be the green hydrogen industry. And so we started talking, and I realized that he wasn't just knowledgeable about the green hydrogen industry. He had extensive knowledge about the entire climate tech, regenerative agriculture, solar, wind, renewable energy. And I was just so fascinated. And I almost joked with him. I said, you should write about all of these things too. And he kind of smiled and said he focuses on green hydrogen because that's the startup that he's trying to raise funds for. So he wants everybody to believe or see him as a green hydrogen expert. But I was pleasantly surprised that his breadth of knowledge was way wider than just that one topic.
Awesome, and very smart from his point of view.
Yeah.
Because he wants to be an expert in this area in order to be able to be acknowledged by the others and invest into him. If you could design your dream founder, what would be the three traits they definitely have? 3 characteristics.
Great question. So the first one obviously would be for me is the hunger, the desire to solve a problem, bring the product to market, and become successful. Because in becoming successful, they are fulfilling their vision and mission of bringing that solution to the marketplace. That would be number 1. Number 2, I would say, is the ability to learn and be coachable. Because I've seen too many founders who think that they know everything, and they're not willing to listen. They might listen, but they won't act on it. So the ability to realize and be coachable. And the third one, I think, is, have that mindset of working with the market rather than against it. And what I mean by that is a lot of the founders will think of their company as the center of the universe. It's all about them. But I want my founder to realize that it's not about them. It's about their customers. It's about the product, what the product or service is doing out there, rather than looking at, I have made this sale, my sales are increasing and my valuation of the company is increasing, so I can have a bigger round at my next raise. No, don't think of it that way. Always think of who you're supporting, and if it wasn't for the customers or the problem that you're solving, you wouldn't be where you are.
100%, you are right. I would like, to address you some quick-fire question, I will name it, with a short answer to see your perspective. What is the one thing founders should stop doing when pitching investors?
They should stop trying to pretend like they know it all.
So looks like you met a lot of startups which are thinking they know everything. Interesting. The most overrated buzzword in tech right now?
Multiples. So I always talk about, people talking about 10x and 100x multiples that they are going after. I think it makes no sense. You need to start focusing on going from, what your product is and how you reasonably scale. Yes, everybody wants those multiples, but it's not always the right approach.
Favorite startup you have backed so far, and what stood out?
The startup that I've backed most recently is in the blockchain space, and they have used blockchain or the decentralized ledger technology to keep track of all the incidents, whether good or bad, that are happening in our climate worldwide. And the founding team just had a wonderful vision and operations excellence and experience to bring it to light. and I think that the engineering team that they have is second to none. So they're going to be launching their app in the fall of this year, and I think so far out of all the founders that I've backed, this one is the top.
Where is based? I would love to find out more
It's
about
based. The founders are based in Bali, and their engineering team is in Estonia. And other places in Europe too. Yeah, in Europe. So I would, at maybe another time I'd like to give you the name of the company, but they are still under stealth mode, so I don't want to go public with it.
I would love further to discuss about it.
Absolutely.
In 3 words, what makes a founder unforgettable?
Teach me something new. 4 words. If a founder tells me that I'm willing to listen to what you're telling me, and if it goes with my ethos, I will act on it. That's what I want to hear.
Amazing. You actually taught me something new today. I love the discussion. I'm not sure if I share something new, a new perspective.
You sure did. You did.
Yeah.
Yeah.
Okay,
I
great.
learned a couple of new things from you as well. Very nice. I can tell that you've had good experience in the investing world and dealing with startup founders as well as investors and LPs.
Thank you, AJ. And one more question. What's the first startup you invest in? What drew you in?
The first startup that I invested in, unfortunately, it was called Zero Waste Technologies that I mentioned earlier. That did not go well. But what drew me in was because I believe in recycling so much. I'm always telling my friends and family members not to throw food waste in the trash can, not to throw cardboard in the trash can. There's different places how you recycle everything. And so when I met with this founder whose vision was to revamp the recycling industry for every person, I immediately was drawn in. And so that was my heart and my gut telling me that yes, listen to this guy.
Thank you very much, AJ, for sharing all these details with us. And I hope the people which are looking today or whenever they look to our video will take advantage from the information that you shared. And I would like to ask you finally where the people can connect with you. I don't know, either for an advice, mentoring, or even for the investment point of view.
Yeah, for sure. My LinkedIn is probably a good way for people to get a hold of me. They can look me up, Ajay Dugar. My LinkedIn ID is A Dugar. But I'm also somewhat active on X and Facebook. So that would be another way. But yeah, LinkedIn primarily. I'd be happy to speak with them.
Is it any startup platform or also, I don't know, events that you are usually attending where they can get in touch with you? Because you mentioned some...
Oh, yeah, absolutely. So that's a great point. There's an organization called Top Tier Impact, TTI. It's an organization it's a network that brings together impact investors and impact founders and impact entrepreneurs, anybody that's in the industry that can make a positive impact to our planet. And I am the co-ambassador for the Los Angeles chapter of that organization, of TTI. So they can always go to the website, toptierimpact.org, and find out more information, or they can reach out to me on LinkedIn or through the TTI website, and I'd be happy to give them more information.
Thank you very much, AJ. Awesome discussion, lovely presence, and awesome information. Glad to have you here. And from now on, I think Tisha will be also in the picture because looks like she likes the podcast and she likes me as a guest. Thank you very much.
She was listening to everything very patiently. Yeah,
I'm sure that she learned more than everyone because I'm talking all the time with startups and she loves to stay here with us. Thank you very much for your time And for you people, awesome startups which are looking to us, please comment if you have a further question, and we would love to approach them in our next session. See you soon.